Are you investing in artificial intelligence? In today's video, we're going to be breaking down two monster AI stocks. One is up 925%. The other one is up 1,910% in the last 2 years. And according to Wall Street, they are saying they are both very strong buys. Now, when we look at the companies, we are looking at the shares of Palantir Technologies and also Applovin. Now, it's funny enough that Applovin was one that I've been discussing with my financial advisor, and we have seen these shares absolutely soar in the last 10 years. A lot of people are saying they are very, very big buys. So let's start with Palantir and really break it down what it looks at right now. They are saying or forecasting 65% of an upside, and I want to break down exactly what we're seeing and what they say over on Tip Breaks to break it down. Now, when you think of data analytics, that is exactly what this company does. Primary software is Gotham and Foundry, letting organizations make really easy, complex information and really simplifying it. Now, this, of course, the software is built around ontology framework that brings really the digital data into the real world, which is a pretty cool ability. Now, coupling this with artificial intelligence, and if you've seen this company, it has been and really had some really high ups, some really low lows, and overall, when you start thinking customers increased 43% to 711, average existing customer is spending 20 to 30% more, giving it an 828 million or 36% increase in the revenue itself, which makes a big difference. Now, the stock peaked at $125 a share in February, but has pulled back about 30%. A lot of people are saying concerns of insider selling, Pentagon budget cuts, things that could be coming down the line. Now, the other one that we look at is Applovin. Now, they're saying Applovin could see 140% implied upside, and this is ad tech software. This is huge. When you look at some of the primary products, app discovery, Max leaning on artificial intelligence for advertisers to publish within companies themselves. They also have a studio that is designing mobile games. If you're familiar with any of my channels, I play a lot of mobile games and monetizing in-app purchases and advertising to people within the games themselves. Now, the company did business of $90 million, really focused on the advertising software that they have. And when they start implementing this, it's going to be a big difference. Now, revenue increased 44% to 1.4 billion, which a profit margin of around 25 points, and the GAAP net increase of 253%, which is kind of incredible. Now, again, this is one that I discussed with my financial advisor, really looking at, and again, a tip that we got was to buy Applovin. So let's see what it looks like from kind of a perspective when we hop over to Tip Ranks and see what this does kind of look like. So right here, guys, we break down Applovin. As you can see, one day, which is after hours or when the market is closed, up about 4.8%. When we start going back the last 5 days, we are looking at down 15.31. 3 months, the exact same 15.57. So we have seen about a 15% pullback in the last 90 days. When we go back 6 months, 213%. So again, as a financial analyst and thinking about this bigger picture of what the professionals are saying, they're saying this could still be a very good buy. Now, if you remember over here on the right, the outperform is at 8. When we looked at NVIDIA, they were actually at a 9. When we start looking year to date, down 16, and then 350% in the last 12 months. Think about that. If you put money into Applovin, you would have over tripled the money you put in there in the course of a year. 3 years goes to 482, and then 5 years goes to 314. So again, tripling your money that you're putting in here. What are the analysts saying, though? Looking at the forecast of the analysts, they're saying a moderate buy, 13 buys, 4 holds, 1 sell. And overall, looking at the upside of what we could see within here. Now, thinking of the price that it sits right now, $270, they are also saying that on average, by essentially the next 12 months, we could see it at $530 would be the average, 650 being the high, 200 being the low. So could see a little bit of pullback depending on what we see really going in the marketplace, what is going around artificial intelligence, and how much they can implement into the mobile gaming aspect, which of course, if they get a good implementation, if they get it into a bunch of mobile games, you could see the revenue for this company go through the roof, thinking around the 530 to 650 mark, which means looking at a 2x, 3x again in the next month. So what does AI say about AI stocks? outperform Applovin on the NASDAQ, as you can see. Advertisers can now access 1.6 billion active subscribers. So if you're a marketing company and you're looking to market to those, that is going to be huge. Share repurchase, 500 million to buy back shares if they do use it. Applovin has been blasted by a series of short reports. Driving it back and driving it down is exactly what we've seen. And then, of course, they compare it to the S&P 500. We're at 342% growth in the last year. S&P is at 14, which again is kind of crazy in the last 12 months of where that SPY is sitting at. Now, again, the other one that we're looking at is Palantir. So let's break this one down a little bit further and see exactly what they're looking at. So definitely a little bit less of a stock price. $84 is trading at. But as you can see in the 1 day, starting to see a lot of rebound in the market. And this is neutral sitting at 6. Remember, Applovin was at 8. NVIDIA, again, was at 9. When we start looking at the 5 days, still up, 3 months, still up, 6 months, 144. So in the course of the last 6 months, you could have over doubled your investment in here. Going back year to date, a couple months, then we go 12 months. You're at 234%. Thinking again, you could have over doubled your money within the last year by just picking up the stock itself. 3-year gets crazy at 600%. 5-year is almost at 800% from where we have seen this. Now, the analysts are forecasting a hold. So interesting enough with this, they're not saying a moderate buy. They're not saying a strong buy. They're saying to hold this itself. And you notice when you're thinking of 95.33 or $95.33 over the next 12 months, that is the average low of 35, a high of 141. So it seems like the analyst forecast, the reason for the hold is that is an incredibly high volatility that we could see out of this company. 144 on the high, 35 on the low, with an average price of 95. That is a massive swing depending on the technology and depending which way it goes. Now, AI is saying 76, so outperforming, still doing incredibly well. They are leveraging AI and Gen AI themes sweeping across the technology sector. Government contracts, that is kind of the sticky point, which is driving the stock down considerably. We don't know exactly what President Trump is going to do when it comes to government contracts, when it comes to AI, when it comes to technology in general. It is still a really big question mark. Now, the major pushback on the bullish review, 44 EV revenue, making it hard to say if it's in the right spot to step up and get this company and invest in this company. But again, thinking of where we're at that 14% for the SPY, looking at this one, we are at 243. So doing incredibly well when it comes to both of these companies over in their entirety. So when you start breaking out these AI companies, again, I do not invest into individual companies. I invest into ETFs, which hold these, including, looking right here is the NASDAQ, looking at the QQQM, looking at some of the companies like the S&P 500. So even though I'm not investing in the companies themselves, I still do hold stock in these companies, which of course can make a really big difference with your make it or break it when you're looking at investing in the stock market. Now, my advice to you, I am not a financial advisor, but I have been in finance almost 20 years, which is kind of crazy. But when we start breaking these down, it is a good insight into where the company could perform, what exactly the analyst forecasts are saying, if it's a buy, if it's a strong buy, if it's a hold. Right now with Palantir, it seems to be a hold. When you look at Applovin, they are saying it is a moderate buy. NVIDIA is still coming in at a strong buy with the pullback that we've seen. So overall, dollar cost average, I cannot stress this enough. If the market's going up, if the market is going down, dollar cost averaging into these AI stocks, dollar cost averaging into these larger tech companies are going to make a really big difference. You're not putting all of your eggs in one basket, but again, you're seeing some of the upside, maybe not as much as the downside. And personally, for me, that 3 ETF portfolio with the QQQM, the VOO, and the SCHD really does make a difference when it comes to reinvesting and dollar cost averaging in there. We're putting $250 into those specific ETFs every single week for the foreseeable future, making a really big difference. That's going to do it for today's video. Let me know in the comments what you guys think. And as always, thank you guys for watching.